Nicholas Bornels of Capital Link again, and I would like to welcome you to the panel, the session on chemical tankers maintaining sector leadership. Norwegian ship owners have been greatly involved with the chemical tankers segment. So indeed, the title maintaining sector leadership is particularly fitting. I would like to thank Clarksons for putting together and moderating this panel, Christopher Eitzen. We have a great relationship with Clarksons, working together on many in many of our forums. So Christopher, thank you for inviting everybody. I would like to also extend a tremendous thanks to all the panelists for, we have a top panel. So thank you for joining us. I'm very proud of this panel as well as of the overall forum, and without any more delay, I will turn it over to Christopher.
Thank you very much, Nicholas. I'll just get the presentation up on the screen as well, which I think you should be seeing in a minute. Can you see there? I think you can see the screen. Thank you very much, everyone, for signing in to this chemical tanker panel discussion. As mentioned by Nicholas, the title is Maintaining Sector Leadership. And I think I'm just going to give a brief introduction before all the panelists give a brief introduction about themselves and the company. So the Norwegian European companies have a long heritage within chemical tankers, both owning and operating assets. The sector provides a vital part for today's society, and the fundamentals are argument place for a new and exciting period now they're going into post-COVID-19. So I think we'll start by introducing Axel Eitzen. If you could give a few words about yourself and Christiania Shipping before passing the word over to Kristian.
Thank you very much. My name is Axel Eitzen. I've been owning and running shipping companies, being Julian Eitzen, Camilo Eitzen & Co., including Eitzen Chemical, and now Christiania Shipping for more than 40 years. We've done 32 acquisitions in the shipping worldwide markets over these years. In Christiania Shipping, we run industrial-based chemical ship owning and operating company in the smallest chemical tanker space. We have around 20 vessels of 3.5 to 12,600 ton deadweight size, both coated and stainless steel tankers. Our industrial COAs are predominantly on the European and West African coast at this point in time. In this challenging market we are presently in, we have an EBITDA run rate of approximately $1 million every month. Thank you.
Kristian?
Oh, yeah. Okay, my name is Kristian Morch. I'm the CEO of Odfjell SE. We are leading a chemical tanker owner and operator, and we also own and operate onshore terminals and key chemical hubs around the world. We are listed on the Oslo Stock Exchange, and over the last 5 years or so, we have been working to transform the company. So today we believe that we stand on the strongest platform in our industry. I'm sure that there's a few panelists that will disagree with that statement, but that's how we see it. We have recently been concluding the largest fleet renewal program in the history of our company. So today we have the most energy efficient fleet in our industry. I think that's it. I'll hand it over to Mark.
Good afternoon, everybody. My name's Mark O'Neill. I'm CEO of Columbia Shipmanagement. About 2 weeks ago, we were very proud to announce the joint venture, the merger between Seatrans and Columbia Shipmanagement to form a Scandinavian ship management company under the name of Stodig Ship Management, which I'm reliably informed means stable. And the reasons for that we'll talk about later, but we see this as a fantastic opportunity for us in a market that we have very, very close contacts with, and we're able to bring quality third-party or second-party ship management to bear in that market. So exciting times. Thank you. I'll hand over to Hans.
Thank you, Mark. My name is Hans Solberg. I'm the CEO of Hansa Tankers, which a I run together with Mr. Torfinn Eide. The company, which is based in Bergen in Norway, started its operation 10 years ago by forming a pool that today is consisting of 10 different owners participating with 46 chemical tankers sized between 19 and 33,000 deadweight, all with cargoes made of stainless steel. The last year turnover was just below $400 million. And the ships that we're operating, they are trading worldwide. The number of ships and their capacity places among the world's largest fleets within this segment after Odfjell and Stolt-Nielsen, which are also present in this debate, and the Japanese MOL group. The Bjarne Riiber group here in Bergen was a founding partner in Hansa Tankers, participating today with 10 ships, of which 7 of them are wholly owned. Investor groups put together with local-based Tailwind Management and Hansa Tankers have over the last couple of years acquired 4 chemical tankers in the second-hand market, all placed in the pool. So the other pool partners are Midgar, which is a joint venture between American investment fund Vaisata and Hansa Tankers. It's Nishin Shipping of Tokyo. It's the Bokem CMB from Belgium. It's the K-Line Group from Japan and Singapore. It's Manavi from Italy. It's Utkilen, based here in Bergen. And it's Songa Chemical Tankers and TRF, both of them based in Oslo. Then, Lucas, it's your turn.
Thank you very much, Hans. Thank you for having me at this panel. My name is Lucas Vos, calling in from Amsterdam, where I live. I'm president of Stolt Tankers, have only been so for 1.5 years, so arguably the least experienced person here on the screen. However, I have a long background in shipping. I've been on the container side for 20 years, starting with Netloyd, then came P&O Netloyd, and I ended up at Maersk, where my last job was the Chief Commercial Officer of Maersk Line. Really enjoyed it, but was also happy to step out for a while. Went into the flower business, which you do as a Dutchman. You need to have a stint in that segment. But shipping pulled me back in, and I'm happy to be at Stolt-Nielsen right now, president of Stolt Tankers. We're the largest operator in our segment, not only on the deep sea side, but we also have our regional services. And indeed, I would argue with Kristian that I think we have the best platform in our industry. You rightfully predicted that. At the end of the day, it's our customers that will decide that question, I guess, who is the best performer. I'm happy to be here and to talk about maintaining sector leadership with you together. Thank you.
Fantastic. Well, thank you everyone for that brief introduction, and thank you for dialing in. And I agree with Nicholas that we have a great panel here to discuss the chemical tanker market. The intention is to touch upon a few topics and discuss sort of the sector potential, some recent trends, and also some pitfalls. We'll cover some of the demand and supply dynamics, as well as some things that have been happening on the asset side, as well as valuations in the capital market, and also some consolidation issues or topics. So I think we'll start briefly looking at demand. And I think we don't want to go into too much detail. Chemical tankers is a very intensive industry with a lot of focus on margins and it's a lot more industrial than many other shipping segments. And I think in general, as a house view, Clarksons is very favorable on tankers at the moment. It's all the way from the large crude carriers to product tankers and also down to chemicals. We think we have a fantastic foundation to build upon, and we think we're going to see a period where there's a lot of potential going forward. So just as a general view, we're very positive about the space. And yeah, as mentioned, we don't want to go into too much detail today. We just want to briefly give a backdrop of the demand and the supply before we look into more topics that's sort of happening in the chemical tanker space today. So I guess starting as a big picture, focusing on the forest and not the trees, the chemical tanker space is highly correlated to the specialized products, or the specialized products highly correlated to the world GDP. we can see there's a 0.9 correlation, meaning that if the GDP is expected to grow, so is the special products trade. And as we see on the graph on the middle, the expected GDP growth provided as a consensus forecast by IMF is expected to be 5.8% in 2021 and 4.1% in 2022. Thereby, if you look at the graph on the right-hand side, we can see that we estimate that this will positively affect the demand of the key products for the chemical sector, chemical tanker space. And that's sort of the backdrop that we think is very interesting going into sort of the post-COVID phase of the industry. And I guess, Kristian, Odfjell has also been positive on sort of the demand outlook and especially on sort of cargo specific dynamics. So I wanted to ask you initially sort of to give a sort of overview of why Odfjell is optimistic on the demand side for the chemical tanker space.
Sure. No, I think we share the view that there's a very strong demand story. I think the graph you're showing here on the left side correlates number of tons to GDP. And I think that's kind of been the old rule of thumb. You've been looking at a GDP with a factor. But I think what this does not take into account is the ton mile. You've seen recently and still very much today that demand, supply of product or production of product is being centered in the US and in the Middle East. So that means that the chemicals will travel over longer distances. So that means that you will probably have a demand side that's more resilient to downturns in GDP than it has been. And it's also why we believe that the demand for chemical tankers will grow faster than GDP. We believe that it's going to grow compounded around, let's say 3-4% over the coming years. In the very short term, near term, however, I think we are even actually more optimistic. You always have to be careful when you are that. But when you look at the industrial production and the demand for goods at the moment, and at the same time, you see that inventory for chemicals in Asia has been dropping quite dramatically over the last 6 months. I think there's reason to believe that in the next, say, 6 to 12 months, that you're going to see a significant pickup in demand. We're expecting as high as maybe up to 6% starting from the second half of this year. So I think there are some pretty interesting dynamics, and when you take that in combination with the supply picture, then I think it has some quite interesting ingredients for a potential upturn.
Fantastic. And I guess sort of what do you think initially is the key pitfalls that could hinder sort of an effect going into 2020 and beyond, 2021 and beyond?
No, I think it would be a mistake to think that demand is not a function of economic growth. So if you do have a real correction or a downturn, depression in the industry, in the world economy, of course we will be hit. I think, I've been quite surprised in terms of how resilient demand has been despite of COVID and a world that's just a weird world around us. Still, it continues to grow. So I think the biggest fear is by far that there's going to be a correction in the world economy. Other than that, I think there's some structural, very healthy signs in the demand side.
Very good. Thank you, Kristian. And then just to briefly look on the supply side, I know you mentioned a little bit already, and I think some of these slides support your arguments as well. Starting on the left-hand side, there has been an increasing average haul for the specialist fleet, especially since 2019, both for the US and the Middle East. And essentially what this does, it sort of reduces the supply as the assets spend more time at sea and are less able to pick up more cargo. Similarly, as mentioned in the sort of opening, Clarksons are very positive on the whole tanker space in general. And as we can see from the middle slide, the correlation between the product tankers and the chemical tankers is 0.7, meaning that if there is a upswing in the product tankers as well, then that should have a ripple effect on the chemical tankers as more assets take up their original cargoes instead of eating into the sort of smaller cargoes from the chemical tanker segment. And also adding to that, we also have, as sort of is the picture in many shipping segments today, where we have a very low order book. We have the same in the chemical tanker space. There is a high amount of vessels that were delivered around the financial crisis. So we have have an aging fleet, which is not being renewed at the same rate as it's being scrapped, and we also have further scrapping candidates. So the net result is that we have a negative fleet growth going into the next few years. And as mentioned, sort of similarly to the other industries, the net fleet growth and a lack of new builds is somewhat due to the new propulsion, new regulations. People are hesitant to order without knowing exactly what to order, and sort of that's something that we can definitely see in the chemical tanker space as well. So I think these three aspects really underpin that the supply side is not there to ruin the positive dynamics we see on the demand side and that Kristian just discussed. So I think arguably we have a very favorable demand and supply backdrop for the chemical tanker industry. And that's why I want to hand the word over to you, Hans, to sort of have your views on do you think the chemical tanker market is on track to be a favored industry, given sort of some of the discussions point we had today and the market dynamics in general?
Thank you, Christopher, for asking. And yes, absolutely, I share the positive view that Kristian just was talking about. That those are the macros of the world, and they are, if not facts yet, they are good predictions of how things will come. And we just have now to get the world back in a normal situation, and there is a lot of potential of use and consume that I'm sure will surface, a lot of uncovered demand that will come back to the surface. And yes, we have, as you mentioned, Christopher, we have the swing tonnage, the influence from them that has been present for some time, but there is also a positive outlook in that segment. And we should be careful in putting the blame on the MR tankers or the owners of MR tonnage that they are eating or stealing from our table. The situation is that they are in as bad situation as the chemical tanker segment, and the moment that there will be an upswing, they will disappear. They are not in this segment because they necessarily want to, but because they have to in lack of others. And I'm convinced that when we see a better terms for them, that they will disappear to a great extent as competitors from the chemical tanker owners that are represented here and that we are facing. So the outlook is good. It is positive. It may be difficult to see it now that the market has been depressed for close to a year, but looking ahead, there are inevitable signs that are showing that there will be an upswing coming.
Fantastic. Thank you for that insight. And I guess, Mark, what is Colombia's view on sort of the performance optimization and sort of the third-party ship management, and how do you sort of see the industry given the sort of the demand and supply backdrop?
Well, thanks first of all, Christopher, for inviting me, and thanks to Capital Link. I'm in awe of the panel that we have here, and I'm not sure I qualify to be on that same panel. I think we're here more by virtue of what we will become rather than what we are at present. I mean, we as a ship manager have always looked at the chemical tanker sector as a very specialized, very niche, very expensive sector. And as a business, Colombia has a mantra handed down from our chairman that we won't touch any sector unless we're absolutely certain we can perform and operate the vessels at least as well as any of the leading operators, and most importantly that we can do so in a more optimized and cost-effective, efficient manner. And up until now, we've had to turn down many opportunities that have come our way for management, third party, second parties. We prefer to call it management of what we call hard chemical vessels, simply because we couldn't satisfy that mantra and those criteria. We now believe we can in our joint venture with Seatrans, where we are bringing together the DNA of a quality first-class hard chemical tanker operator and the quality of hopefully the perceived quality of Columbia Shipmanagement and all of the digitalizations and economies of scale that we can bring to bear. So rather than taking Mohammed to the mountain, we're moving the mountain to Mohammed, and we're saying, right, if we want to set up a chemical tanker management expertise within Colombia, that is going to cost us a lot of money. We're going to have to engage a lot of expensive people, a lot of teams to do that, which arguably will make us more expensive than the leading individuals on this panel and their companies, who, let's face it, nobody does hard chemicals better than the Norwegians stroke Scandinavians. No one does. So we appreciated that, and rather than trying to set up our own teams, we thought we would join forces with a quality operator and then bring in our levels, our scales of economies, our technologies, our performance optimizations to that existing expertise. And that by that way, we can achieve levels of optimization that we've been able to achieve in other sectors. And we believe also that will apply to the offshore sector in Scandinavia, for want of a better word, and also other sectors operating there. Performance optimization is key, and what we've seen through looking at this sector for quite some time is that yes, it's expert, yes, it's highly technical, but it's probably not that profitable because of the cost, because of the high cost and the expertise required. You need to somehow bring in the economies of scale and the levels of technology, etc., that perhaps some of the larger third-party managers and larger operators can bring to bear. And that's where we see now a fantastic opportunity through Stodig. But it is a challenge.
Yeah, no, thank you for those viewpoints. I think that is definitely, I agree that there is definitely room for improvement in terms of sort of technology and digitalization in the chemical tanker space. And it's a space that's been, I guess it's a margin space where everything matters. So it's important to get all the stepping stones in the right place in order to pull out the margins and profits. So
and incidentally, I would offer any of the fine companies on this panel the opportunity to use our performance optimization control room, irrespective of any other services, just as a sample of the optimization you can achieve. I have to say that on all sectors in which we operate, we've been staggered by the levels of optimization which are achievable. And I know everybody claims their product is market leading, but this product really is market leading. We spent $2 million on developing it, and it is transformational on all sectors that we've applied it to, from super yachts to cruise ships, through all of the various other commercial shipping sectors. So the invitation is there. Try it out, have a go. No one will get an advantage or be at a disadvantage through using it. It's absolutely compartmentalized.
Perfect. Thank you very much for that, Mark. And I believe, did you raise your hand, Lucas?
Well, I just wanted to support that. I think Christian's outlook on the demand is exactly right. I don't see a lot of things on the horizon, except if we can't pull countries like India and Brazil out of the COVID crisis, of course. But that's not where we show leadership, because that's where we're sort of at the mercy of the markets. On the supply side is where we can show leadership, and that we don't go into this this frenzy that's happening on the container side and on the breakbulk side, and that we show some restraint. So I think here we can show, but also to Mark's point, really leadership is indeed about looking at the supply chain and how we can take those efficiencies out, and primarily, and I think would be for me the main point, is to become a lot more customer focused than this industry seems to be today. If there's anything where the Nordic countries can take the lead, it's becoming more customer centric, use the supply chain tools that Mark is describing and really take the lead and show some restraints on the supply side.
Very good. Thank you for those comments, Lucas, and thank you. I think that sort of gives a good backdrop for the supply and demand dynamics, and also some of the elements that the industry in general needs to focus on going forward. So I think that brings us to the next topic, which we're going to discuss a little bit on asset values, and I think we want to sort of introduce this topic. I want to look at a sort of a case study from containers, which I find very interesting, and it's sort of to underpin sort of the thinking that everything is sort of outdated from earlier phases. So for example, in shipping in general, there's been this notion that sort of the older tonnage is not as efficient, not as economical to run. It's not as efficient in terms of emissions, meaning that it would never be valued at the new building parity curve, and they will already be valued at the discount to the new building parity curve, as or the new tonnage has had such an improvement to the old tonnage. But what's interesting is that just under a year ago, we had a very similar asset curve, a sort of a convex asset curve from the second-hand prices to the new building parity in the containers. And what we see today, after containers that had a phenomenal run basically from summer last year, and there's been an enormous recovery in the container segment, and it's looking to go on for a while as well. We can see that the asset curves has moved from a sort of convex to a concave, where actually the second-hand values are valued at higher than the new building curve, illustrating sort of that when you get cash flows that are significantly higher, then asset values will follow, despite sort of the criticism of older tonnage being less efficient and less economical and not optimal size or any of the other critics. We can see sort of that it definitely moves in the right direction once a recovery comes along. So I think that with that as a backdrop, looking at the chemical tanker segment, there's definitely a similar notion here that older tonnage is less efficient. Maybe the sizes are not as optimal. So that sort of brings the question, and I'll bring the word over to you, Lucas. Sort of, you recently added 5 vessels to your fleet as well, some 26,000 tons from CTG, 2016, 27 built. And sort of what are your views on sort of this asset topic, and how do you see sort of the different sizes going forward in terms of earnings, which I guess underpins the asset values in some way?
Yeah, thanks. I think it's an interesting question, interesting what's happening in the container side. Arguably, last year a lot of tonnage was laid up, so that would not enhance the value of that tonnage, and of course it's all in the water right now. And indeed that earning potential is driving the valuation. I would, however, not like to be a customer now of a container company, because the service levels are just not that good. So you also have to ask yourself how sustainable that is. I think if I look a little bit higher, I think the overall issue for shipping in general is that the returns on equity are just not good enough. And there may be companies that do extremely well on it, and that's great, but overall we have just put too much assets in the water for the return that it provides. So my preferred option right now would be indeed to just focus indeed on what's already on the water and see how you can add that to your own fleet. And indeed, and the CTG ships, the 5 ships that we took on, is a good example. Sort of distressed assets the owner really wanted to get out. And for us, a great opportunity to put it in. It fits nicely with the fleet, and then and be able to grow our network in that way, and make sure that we can deliver value to the customers with that tonnage, instead of maybe now going to the new builds markets. And it's the big conundrum that everybody here on the screen is facing. We also know that new build prices are still favorable. So, at the end of the day, success of a ship is defined for 50-60% on what what did it cost you when you got it into the fleet? So that's the big conundrum. I think for now it's time. It's good to wait, hold on, understand where the future propulsion is going, and then maybe go for it. Because as I said, I think what's happening on the container side, they are destroying their own future market yet again, and it would be great if we did not do that on the chemical side.
Well, thank you for that. And Axel, what Christiania has a bit of a varied age profile in their fleet as well. What are your views on sort of the optimal older or newer tonnage scenario or question?
But I think we've seen this before in the market. When the yield improve, the values improve, and the share price improve. And it's very positive, and I think it's very encouraging in the container market. And I very much believe the same could happen with the chemicals space. In Christiania, we have an average 12 years on our core fleet. Old, but
did we lose Axel? I think so. Okay, I think we will come back to some of his comments later then if he's able to rejoin. So then I think we'll pause it on the asset side and move over to valuation. And I think here it's an interesting development or an interesting finding that sort of the chemical tankers space has been somewhat undervalued compared to, for example, the product tankers, as we see in this scenario. And I think, and it has been for quite some time as well. Even if we pull the time series back even further, we can see that they've had the tendency to be underpriced in terms of a P/NAV valuation. So I think that brings us over to you, Kristian. As you mentioned, you've had a large fleet renewal program, and you're in a good position now to generate cash. So why do you think sort of Odfjell and Stolt as well have been trading at such a discount to NAV? And is it the metric doesn't fit or the segment, or what are your views on that?
Well, I don't think you can blame the industry or the sector, really. I think it has a lot of things going for it. I mean, we are much more industrial shipping. We are much more providing real logistical services to our customers, which means that you're protected from the downside. We have seen that over time, whereas you are actually exposed to the upside if you're not overly contracted. We saw that in the second quarter of 2019. You have a very strong demand story. You have a very strong supply story. You have a fairly well consolidated market. You have barriers to entry and all that. So I don't think the answer to the question lies in the sector. I think you have to look at the companies, and then I cannot speak for Stolt-Nielsen, but in terms of Odfjell, I think it has to do with two things. First of all, we have a very illiquid share, and we have that mainly because it's a very closely held share, and that's kind of a repellent on a share if it doesn't trade a lot. And at the same time, we have not had a clear dividend policy, and we have not paid dividends for stable dividends for a while. And then the second thing is that we have just not performed well. But the fact that we haven't performed well in the past does not mean that we cannot perform well going forward. I think for Odfjell, at least, we believe that we were just not efficient in the way that we engaged in our markets. I mean, we have had way too much cost. We had inefficient assets. We had not a really good kind of logistical efficient way of looking at our business. I think, as I mentioned before, we are a liner company more than we are a tanker company. And we've been working very hard to reverse that. So today we have, if you look at cost per unit, if you look at the CO2 emission per unit, if you look at the fuel consumption per unit and so on, we stand on a very, very strong platform. So it has all the right ingredients, but I think for us, the missing piece is really the top line. And I think that's going to come from two places. First of all, it's going to come from a market where I think the market is going to be with us for the coming period, and it was against us in the period just behind us. And secondly, it's going to come from how do we engage in those markets. And it's a little bit of a mystery to me why this industry has been so focused on contracts, and we've been falling over ourselves to sell all our capacity 1 or 2 years forward in reality, that we have maybe forgotten how to intelligently price our businesses. So I think for us, we're gonna take a different view on it. We are not gonna be selling our capacity forward at a loss. We just cannot make a living that way. And if that means that we're going to expose ourselves a little bit more than we have been, then we're going to live with that, and we think that's a good decision. But that was a very long-winded way of saying that I don't think that the NAV discount is warranted. I think there are some very good arguments for the industry itself, but the only thing we can do as a company is to perform and to show to our investors that we can continue to perform, and then it's going to be the equity markets and the investors that they make the decision to move that needle. But we think it will.
Perfect. Thank you for that, Kristian. And I agree. It's sort of the being able to constantly earn is definitely something investors value. And I guess looking at you, Stolt-Nielsen, to crystallize values, you communicated that you're going to spin off the fish farm business and also Stolt Tankers. So how do you believe this is going to affect sort of the pricing of both, I guess, the old co and new co, so to speak?
Yeah. Well, first of all, let me say I agree with Kristian. I think it's primarily the illiquidity of both shares, with both families wanting to maintain control. And indeed, it's I know my shareholder is primarily looking at the dividends, and if that flow is okay, then he's happy. As to your question, I think it's a desire for Stolt-Nielsen to grow all its businesses. So it's not only Stolt Tankers, but it's also the terminal side, it's the tank containers, and indeed it's also the sea farm. And for that, it's viewed that we need to have more equity in the company, and then it makes most sense that you take a Stolt Tankers out, or Stolt-Nielsen will remain the main shareholder, but that we're going to stand on our own 2 feet. I think we are about half of the group's size. And indeed, it is also driven by the fact to bring out the value of the other business units. There is the conglomerate discount on Stolt-Nielsen. So if you were to take Stolt Tankers out, the valuation of the terminals would be that would become apparent, and that could be very attractive to the share of Stolt-Nielsen. Similar thing for the sea farm, indeed, as you rightfully said. Sea farm is such a small part of the Stolt-Nielsen group that's seen as this infrastructure logistics company, and it's an odd thing. If you look at the valuation of separate sea farming companies, it's way higher. So to just show that that value is there, that Stolt-Nielsen is able to create value for its shareholder, it's very important to do that. And then indeed it's similar for Stolt Tankers. We've had our discussions with the banks, and everybody says that a clean play chemical logistics company is an attractive, can be an attractive share out there, and particularly with indeed the market as we see it now developing. So personally, I see it as both good for the main share of Stolt-Nielsen as well as for Stolt Tankers if we can do the IPO. When we do it, of course, is very much driven by our own performance, because I think, as Kristian says, I would mirror that. Our performance has not been where it should be. So we really need to work on our EBITDA numbers. We do take a different strategy. So that's interesting that we take different views on that. It's a different strategy, but we need to focus on that. And then, of course, we're in the hands of the capital markets. And who knows when that window is open. But yeah. That's
well, thank you very much, Lucas and Kristian. I think that gave a good overview of sort of some of the problems that have been maybe hindering the stocks from running, and that there's definitely room for upside, and that there might be possible ways to crystallize them. So I think that takes us over to the last section, and I guess since we lost Axel earlier, you feel free to add anything on sort of assets here as well. And I think Hans also raised his hand on the asset side. So we only have five minutes left. So I think in terms of consolidation, that's always an interesting topic that can add value to the different companies. And as we see here, on the chemical tanker fleet, there is definitely a fragmented asset ownership and control, especially on the coated fleet. So then handing the word to you, Axel, what do you think stands in the way for consolidation happening, or what are your views on consolidation for the segment in general? You're on mute. Axel, you're on mute. There we go.
Sorry. We very much believe in the power of consolidation to get an increased market share and get better bargaining powers to the cargoes. We also believe in expanding the markets, and both geographically with trade opportunities and cargo access, and also in sizes. So we do believe that it's a very valid way to go forward for a company who wants to increase in size and increase in its importance, and to get the increased efficiency and thereby the increased yield. And those are the two key focuses that everybody has had, that we need to increase the efficiency of the fleet in the market, and we need to increase the yield, and then the prices will come after, the share prices will come after, and the discounts will go down. It's so for Christiania, we believe that it has good sense to go for a listing, even though we are small and have older vessels. We are giving a good yield even in this lousy market. So we believe by being listed, we should offer possibilities for other ship owners with similar focus on increased values and efficiencies, that we could go together and improve on these things. So from Christiania point of view, we would like to try to get listed, to be active in the consolidation, and to bring people of same minds together, and to increase the efficiencies and the yield and the valuations.
Very good. Thank you for that, Axel. And Hans, moving the word over to you, what do you think is sort of benefits of consolidation, and why we're not seeing more of it if it's potentially positive for companies?
Well, what Hansa Tankers has been doing since we started 10 years ago with 3 ships belonging to one owner, that has all been a long tour of consolidation, bringing it now up to 10 different owners and 46 ships, and that has worked out very well. We defined early what was going to be our strategy and plan in terms of tonnage, in terms of what we wanted to focus on. And we have been sticking to that plan in spite of other tempting possibilities that has showed up along those days or years. It is important, though, that if there shall be a consolidation, it leaves the managers with a high responsibility and a high integrity of operating ships for others. I think it is very important that one that should run a company that is consolidated between other owners also have their own skin in the game, so that they are focusing then on earning money for themselves at the same time as they're earning for others. But yes, we fully support the need for further consolidation, but it has to be done in a proper way, and the consolidation, they have to aim to stay for long, to stay over time, and not just jump in and out in accordance to the market swinging. That doesn't really help on the long term of the way to raise the profitability of the chemical tanker segments.
Thank you, Hans. Thank you for those comments, and it's definitely interesting to see what happens going forward in terms of consolidation. And I think that brings us to the end of the discussion today. And just as a quick highlight, I think we have some attractive demand and supply dynamics in the industry. The valuation, there's definitely upside in both asset values and companies' values. And I think there is room for consolidation sector optimization, as we touched upon, in terms of digitalization, customer focus, and also discipline to increase the earnings potential in general, and also increase valuation. So I think companies are responsible to help optimize the industry in order to obtain sustainable returns and position themselves to maintain sector leadership in a potential upturn. Thank you everyone for dialing in today, and thank you very much to the panel for this discussion.
And I would like to add my own thanks to you, Christopher, for the expert moderation, and of course to all our top level panelists for being with us. Thank you so much. Thank you.
Thank you very much.
Thank you all.
Thank you. Yeah.
Bye.
Thank you very much.
Bye-bye now.
Bye.